Refinance mania is crazy right now, right? Everyone's refinancing. You see it on the news. It's like, refinance now. You should. You need to talk to a lender about your mortgage if you haven't. You really should. I'm a great lender, talk to me. But if you don't want to talk to me, talk to someone else, because there's money left on the table right now for millions of people. Seriously. However, we're not going to talk about that. What we're going to talk about today is we're going to talk about a loan product that you should talk about if you're thinking of refinancing into a fixed rate program, okay? So usually when you're thinking about a fixed rate program, you're thinking about a 15-year or a 30-year, right? That's what you always see advertised on Facebook, Instagram, Twitter, whatever. You always see, get a 30-year mortgage for XYZ. Get a 15-year mortgage. And then for some reason there's these ads where they're saying that like specific presidents want you to refinance into a 15-year fixed. I have never heard a president have an opinion on what mortgage people should have, but those ads make me laugh. Anyways, there is another option. There's actually two other options, but I'm going to tell you about one other option that I am loving right now. 20-year fixed. Yeah, it's a 20-year fixed. 20-year fixed rate mortgage. Seriously, it is the perfect bridge. You've got a lower rate than the 30-year, and you've got a payment schedule that isn't as aggressive as the 15-year. Because what I see a lot of is I've got great borrowers that want to pay that mortgage off because they want to live in that house for the rest of their life, or they want to pay it off and then have a ton of equity. And instead of being able to do the 15, they do a 30-year, and that's because the payment on the 15 is too high. But the 20-year is actually incredibly approachable. So if you're trying to decide and you're like, oh, I really want to do the 15, but I can really just afford the 30, look at the 20-year, because you may find that that is the solution. And what I've actually been seeing is that with some clients, based on when their rate was locked, okay? Because we've had a pretty, over the last few years, in some cases, I've actually been able to take someone who was in a 30-year and put them in a 20-year, and their payment's not even going up. And it's just because of when they locked, because they locked at a point where the market was a lot higher. So if you're thinking about refinancing into a fixed rate program, don't feel like it's just 30-year or 15-year. There's also the 20-year, okay? Thanks for